This week, we're looking at the growing dangers that traditional HELOCs pose to senior homeowners and the safer alternatives that are available beyond a reverse mortgage. We'll get into all the details right after this short message from our sponsor.
Liberty Reverse wants to help you grow your reverse mortgage business with our proprietary Equity IQ product suite. Equity IQ gives your borrowers access to more funds, lowers their upfront costs, and expands eligibility for home purchases. Learn more at partners.libertyreversemortgage.com today. This ad is intended for mortgage professionals only and is not a consumer solicitation. PHH Mortgage, doing business as Liberty Reverse Mortgage, is an equal housing lender. NMLS number 2726.
Welcome back and thank you for joining us. Today, we're going to zero in on a growing problem in the home equity financing market, and it's one that hits older homeowners especially hard, and also the opportunities for reverse mortgage professionals to help meet this growing demand to tap into home equity, but in a safe manner. A CBS News column entitled, "Is a Home Equity Loan or HELOC Safer for Seniors in 2025?" warns that for many retirees, a traditional HELOC or home equity line of credit may be the wrong move that can lead to disastrous consequences. One of the risks that's noted in the column are the variable interest rates that make for unpredictable monthly payments. And as CBS News points out, many older homeowners may be better served with a fixed rate home equity loan or home loan, or even a reverse mortgage, especially if they cannot consistently manage monthly payments that are tied to a fluctuating rate. But what if the homeowner doesn't want a reverse mortgage? In addition, the CFPB's 2023 Consumer Response Annual Report found that home equity lines of credit complaints rose about 21% versus the prior 2-year monthly average. And HELOCs are broken out in the mortgage complaint section, and the Bureau specifically says that it analyzes complaints by older consumers as a distinct subgroup. Now, a significant share of those complaints do come from retirees. While the report doesn't break out HELOC payment shock specifically, the fact that mortgages, including HELOCs, home equity lines, do remain among the top complaint categories suggests that the issue is far from hypothetical. And those complaints are not surprising, considering a senior with an $80,000 HELOC balance at 7% would see their loan payment jump from an interest-only payment of $467 to a roughly $719 payment a month when the loan recasts at 9% and is amortized. And that's a 54% increase in the required monthly payment, and that's the very definition of payment shock. The blog A Senior's Life puts a point on the issue in terms that a reverse mortgage professional can appreciate. While the media and regulators have scrutinized if reverse mortgages are suitable for older homeowners, we see little, if any, interest in loan officers who promoted cash-out refinances or home equity lines of credit to homeowners on fixed income, with little consideration of the increased financial burden of a monthly payment or a payment shock when a HELOC resets. A working paper from the Urban Institute analyzing 2018 to 2020 data reports that 32% of HELOC applicants aged 65 to 74 were denied the loan. In other words, the appetite for tapping into home equity is strong, but the ability to do so is often limited by income or a DTI or debt-to-income ratio. And as a result, there is a clear shift in the senior lending marketplace today with expanded alternatives to the traditional HELOC. For example, in September 2025, Longbridge Financial launched their HELOC for seniors. We covered it here on Heck'em World. And it features an open line of credit for those 62 and older, and it has a fixed rate on each draw and interest-only payments. Also in September, High Tech Lending, which does business as American Senior Lending, launched their Equity Select loan, and that is featured in this week's podcast, by the way, if you want to check out that interview. It's a first lien position, non-recourse loan with minimum payments as low as 1% of the amount borrowed and a monthly payment cap. That gives them some safety. In October, Finance of America Reverse announced a strategic partnership with Better Home and Finance to launch their home equity lines of credit and also home equity loans for the homeowner who is 55 and older, and it's being delivered through Better's Tinman AI platform. So to sum it up, HELOCs may be are very attractive for their initial low payments to older homeowners, but they carry hidden risk that can blow up a retiree's best laid plans. And considering HELOC rejection rates and increasing consumer complaints from older borrowers, now is the time to bridge that gap with solutions that don't serve as a financial time bomb. So if there ever was a time to highlight the value and the flexibility of senior-focused home equity solutions, it's today. So what are your thoughts? Let us know in the comment section below. And if you did find value in today's episode, we'd ask you to share it on your LinkedIn network. We also have a YouTube channel. Be sure to subscribe and hit the notification bell. That way you never miss any of our latest content. And each and every week, we curate reverse mortgage news for you, the mortgage professional, in our weekly podcast, Heck 'em World Weekly. We have both an audio and video edition. Listeners can listen and subscribe on Apple Music and Spotify. Thanks again for joining us, and be sure to return next week for more reverse mortgage news, commentary, and analysis you'll only find, yes, right here at Heck 'em World. Have a great week.